Ladies and gentlemen, open banking pioneers, hello and a big warm welcome. And thank you for joining us around our campfire, our crypto campfire, to discuss the time for crypto is now. And I think we can all feel that it is. There's a moment in time and it really is now. I want to just take a step back and let you know how we arrived here. So last year, Lawrence Wintermere, who was our host and also the co-chair of the Global Digital Finance, and I were talking about, we were having a chat and we were talking about our two communities collaborating. Now there's a word we love at OBE. And we thought that if we got to a year ago, crypto and open banking in the same sentence, let alone around the same campfire, it would just be a stretch too far and we wouldn't get any traction. And it would just be that visionary step that would be a little bit out there. Fast forward a year, and wow, Lawrence, you called it right, because everybody can see that there is a convergence between open banking and crypto. And what I want to do is explore where we go. Now, I don't think anybody can clearly define the roadmap as we can from open banking to open finance and beyond as to how crypto and open banking will converge. But we can all see and feel that something is exciting and is happening. So it's not a dissimilar place to where we were when we started OBE 3 years ago. And we all felt that something was happening in the open banking market. So we got our pioneers around a campfire to learn, to share their stories, and importantly, collaborate. And now we're a global community of 15,000 plus. And I have to just keep pinching myself. It's unreal. So let us all do the same now and talk about crypto, work it out together with industry experts from our community. Put quite simply, what we do best, when you get good people together, we believe that amazing things will happen. And to be absolutely honest, I recognize that I've got a huge amount to learn around crypto. And from what I hear from our community, I'm not alone. And I'm just not cool enough and down there with the kids. So to learn and to get us all in that space where we can get behind the jargon and understand, we've actually put together our Crypto 101 series. And I would like, if you want to nip over to LinkedIn, you can actually have a look. And I can absolutely promise you, you will learn loads. I would like to give a big shout out to Gareth, who you're about to meet, Amelie from Zumo, and Robert for recording them, and our friends at Blue Train Marketing for working their magic. And I do assure you, if you watch them more than once, you will gain more on the second time. And on a personal level, I am delighted that Robert is joining us here today. And quite possibly, I believe he's one of the best legal minds on the planet. Okay, Robert, I'm a little biased there. But what we will be doing over the course of the next year is putting together a series of crypto campfires with Lawrence and with Robert. And Robert can then talk more about the green paper that he's putting together around a new era for the GBP pound. And it's around the omnibus account that they're trying to develop with the Bank of England. So all of a sudden, when you hear that type of activity going on and what Lawrence is doing, you think, wow, crypto, digital assets, it's becoming mainstream. We need to sit up and learn more as a community. So we're going to learn together. We will continue our Crypto 101, and we would love your feedback. We want to get it right, get the pace right. We will be working with Lawrence and Robert to develop this series. So again, please share your feedback with us. It's absolutely key. So right now, we can all feel that something is happening. So let's find out what and learn more from our panel. And what a panel. Lawrence, you and I have waited a long time. And as I said at the top, you called it right. Something is happening in open banking and crypto. So we've now launched our campfires. I am eager to delve into digital assets and learn more. Over to you.
Well, Helen, thank you very much for the kind introduction. And I think just to put a context behind the discussion, which was about a year and a half ago, if not longer, I run a not-for-profit advocacy association for crypto digital assets firms, which include a lot of institutions. And it was actually the rise, I think, with Libra and the Facebook folks that got central bankers really looking at the implications, particularly of stable coins and the risks of stable coins, and most importantly, the risk of cross-border payments with stable coins. And so, it all started to me with the Libra team. And I think the importance of this, and we're going to get on to our esteemed panelists who are all working in this area and get their views of, the kind of big mega trends going on, or the trends going on with the mega trend. But the most important thing in our discussion, Helen, was the visibility, particularly of either large retail FinTechs or payments providers, typically in the US in this instance, that we're looking at stable coins, particularly as a means of helping retail customers with things like remittances, payments. And of course, by extension, many of you will have seen that FinTechs and a lot of the neobank FinTechs offer crypto spot market or derivative market services. So there has been substantial growth. I think most of you will have clocked or paid attention to the news in the last day that the SEC finally approved a Bitcoin futures ETF, which has really been 10 years in the making. So I think the time is now and the future is now for this sort of stuff. But, we've got a decade of unpacking all of this, and there's so many big existential questions around all of this the community is trying to solve. So I'm grateful for the invite, because whether you're in Europe and in what I would call more of a regulated open banking space, or you're in the Americas and you're really in a market-driven open banking space, this is a pretty important intersection from my perspective. So I'm going to jump on to the first panel, where we are going to get insights from our most esteemed panelists, particularly on megatrends and trends that are shaping this intersection. And Jennifer Lawrence, if I can start with you, can you give us, an idea, perspective of what it is that you're seeing in the MasterCard world in this space, and how important is it, not just to you and MasterCard, but how important is it to this community, to pay attention to some of these things going on?
Absolutely, and just to start off, thank you so much, Lawrence, and I really am excited to talk about these issues and the topic of crypto generally with the OBE and my other panelists. So in short, I'm sure you know, Lawrence, as well as everyone else on the panel, there are a lot of trends that we could talk about. So I'm going to highlight 4 that are the most top of mind for MasterCard. And one of the largest ones is just generally the increasing demand for digital payments, which includes crypto. Over the past 18 months, it's safe to say that we are in somewhat of a different reality than we were before COVID. And in light of just the broader trend of digitalization. And so what we're seeing is that people are increasingly demanding more convenient, more simple, and above all, more digital ways to pay. And so this is fueling, really a sustained consumer interest in using cryptocurrencies for payments. In fact, our MasterCard commissioned some research where 4 in 10 people around the world say that they plan to use cryptocurrency in the next year, particularly among the cohort of millennials. 3 in 5 people agree that they're more open to using crypto than they were a year ago for payments. And so while you see, Bitcoin price and Dogecoin memes, they may be what attracts people into the crypto space. We at MasterCard really believe that, the use of cryptocurrency for payments, really the focus is on stablecoins, as you were just discussing, Lawrence, to really serve as that medium of exchange. And so, here at MasterCard, as we think about the future of payments and really where that's going and how consumers are really looking for more choice to use, whatever they want, where they want, when they want to pay for things, that's really why, we are interested in looking at cryptocurrency, particularly stable coins, to, meet and satisfy that demand for choice. One of the second trends that we're seeing is really a growing intersection between the crypto world with the traditional financial world, particularly between banks and non-banks. So you see crypto companies looking to offer bank-like services, seeking to obtain banking charters, especially in the United States, while traditional banks are looking to offer more digital asset services. And so this intersection is driving a lot of new activity that at MasterCard, we believe is going to drive a need for more interoperability, because at the end of the day, people and companies and governments need to be able to use different sources and mediums of money interchangeably and seamlessly. A third one, which I'm not going to get into too much because the topic is a little more crypto, but we have to at least mention the accelerated exploration of central bank digital currencies by central banks. So this obviously is something that MasterCard has been speaking with central banks around the world for quite a few years. And it's a parallel trend that it kind of reinforces the trend that I was just talking about, where we really do need to be focused on how we can enable that interoperability and seamlessness. So if it's a stable coin, if it's your existing commercial bank deposits, if it's cash to the extent that it still exists in 10 years, I don't know, and CBDCs, there has to be a way for all of those things to be used interchangeably. And then finally, one of the other trends that I think we're really starting to see, particularly in the last maybe 3 to 6 months, is the gradual maturation of the crypto industry. So it's funny to think about the fact that the crypto industry really has only been around for 10 years, and most of the stable coins really fewer than 5 years. And so as advanced as the industry is and all the potential that the technology holds, it's still very, very nascent, almost like the internet was in 1990. And so, one of the trends that we're seeing is a growing acceptance by the industry that to scale and really become mainstream, they really do have to invest in compliance and engage with regulators and regulation. And so, what we're seeing is, more investment in these areas, which reinforces the safety and security of traditional financial firms coming into the sector, as well as consumers. And so from a MasterCard standpoint, that again is something that we're very interested in, because one of the things that drives how we serve all the different participants of payment networks across the world is that security, is that compliance, is that if I, go and use my payment card or a stable coin one day to make a payment, I need to be sure that it is acceptable and that it has all the right consumer protections and security measures in place.
Thank you for that, Jennifer, because I think you've laid out the trend framework now for the other panelists. And I just have to add, I mean, you and I often find ourselves talking about this very topic. And I think what you've highlighted to me is one of the most important things about this, which is demand and the utility for it. There's a requirement for it. And then without getting into all of the technical stuff, consumers just want stuff that works. They don't care how the
right.
engine works or the stuff is put together. And we always use the words frictionless or stuff, but there is a perceived great value in that. And I think you point out even in the maturity, a lot of people don't necessarily understand the difference between crypto currencies or products or stable coins. And it seems we're at a point, at least in the market, where the demand is just saying, look, we can see the utility of this and this looks useful to us. And that's the thing we always think it's important for policymakers to pay attention to. And it's great to hear MasterCard's really, honing in on that. So Gareth, I'm going to turn to you because Jennifer's laid a great, sort of mega trend framework for us, but give us your thoughts and build out on that.
Yeah, and I think there's a lot of fantastic points there. I find it really fascinating. So I've been in Salesforce a little over 8 years now. And, back then we thought these FinTech companies were breaking into the scene, using technology to disrupt the incumbents. And now we're working with clients who are going, we're changing the goalposts, moving the landscape altogether. It's crypto first, and some of these businesses in under 10 years are coming up to billion-dollar valuations. The growth and scale of these companies is cataclysmic, and it's not kind of too surprising when you look around. And this week, I remember seeing that the valuation of the entire crypto global markets is $2.6 trillion. It's really hitting all-time highs right across the board. So now you're looking at, incumbents going, this really isn't going away. How do I start to offer products, work with it? Am I going to give a payment solution? Am I going to give a retail solution? I think it was just this week, PayPal announced they're going to offer all their clients in the UK the ability to hold, purchase, and transact and spend cryptocurrencies with them and having a wallet. So, retail has woken up and they're saying, okay, well, I kind of need to know what's going on. I really want to be involved in this. And you've got all the institutions kind of scrambling to go, this is $1 trillion asset. What am I going to carve out? Where am I going to play? What do I want to offer my clients? And how do I keep up with the expectations? And to some extent, this framework is still really in its infancy. There's so many things just taking off. As you mentioned, an ETF is only just launched. So I think everyone's wondering, what kind of slice of this market can I carve out? Where can I come in? And there's a huge amount of people waiting around with bated breath because there's a lot of regulation in the pipeline. So it's almost kind of an anxious, who's going to first move and what regulations come out after that. So I think what I would think is the big theme is everyone is sort of wondering, where do I carve out my niche? And how do I make sure I'm safeguarded from what regulation comes down the line?
Well, I think you've nailed that, and so I think the difference for and anyone of certainly the vintage that I am in this community who's seen so many of these movies before would recognize, outside of some of the distinct advantages that distributed ledger technology deliver, the consensus model, the transparencies, the 2+ trillion you've spoken about have broadly been generated by retail markets and outside of traditional financial institutions. And so I think you're absolutely right about this response to this is here now. How am I going to take part of it? This is important because with your FI hat on, we didn't create this. This has actually been created by someone else. And I think, getting back to Jennifer's point, there is a demand for it. There is a huge public demand. And I think most people will even be familiar, I think, as part of this megatrend of El Salvador, which is just extraordinary that a country would have Bitcoin as a legal tender, aside the USD reserve. So, and this is exactly, you point this out, succinctly, this is exactly why now everyone, I think, we've got to a point of maturity or adoption where we got a lot of stuff to work out, but folks are saying, okay, we can see the utility and the demand in this, but let's work out how we get now to mass adoption. And then again, this is the real great intersection with open banking. The more institutions come in, the greater the adoption. That 2 trillion will grow. But if you look at the size of, the equity, the debt markets, and then, the capital markets or the derivatives market, there's a lot of headroom for growth there. So super point. So now, Yatin, you're last on the queue of these mega trends. I'm really keen to see where you go with this because we've got sort of the foundation of the framework of trends with some of the adoption characteristics. What's your view on this trend topic and crypto, and particularly the intersection of open banking?
Yeah, absolutely. I think this is, firstly, we could not have timed this talk better. I mean, this week we've seen not only, as you mentioned, the first futures ETF, but we've had the Bitcoin all-time high today, the Ethereum all-time high. But I think for me, and this is something Gareth just touched on as well, is the adoption of people like PayPal. PayPal is one of the oldest companies in the FinTech world. And to be able to buy, hold, and manage crypto assets here in the UK, this is a huge leap forwards. And for me, the big trend is adoption. So right now, this community has grown, and for 10 years, for those who've been part of it, it feels like an eternity, but there are still plenty of people who are hearing about cryptocurrencies for the very first time. And this is something that we at TrueLayer feel we have a huge part to play. And if I give you a brief example, a customer of ours, Bitcoin Point, they allow you to buy Bitcoin in less than a minute by using open banking to be that on-ramp from your digital bank, from your physical bank, into the digital world. And I think what we really find is this is a great way of building trust. people have had a long-term relationship with their banks, with NatWest or whoever they may be working with here in the UK or any part of the world. And that brand is something that they trust with their life and their savings to some extent, or their money comes in and out of it. So to see that and have that as part of their on-ramp into the digital world, we think is a huge upsell. And I mean, we've talked a little bit as well. You mentioned a little bit as well about the investment side of things as well. And we see this as with some of our other portfolio companies outside of the crypto space. So free trade and trading 212 are seeing adoption rates of open banking of up to 75%. So yeah, 3/4 of all of their payments are going through open banking, and that is a huge part of getting where we are today. And I think that there's another point with all of this, and it's about being responsible as well. And even this week, the FCA has come out with some guidance around making sure that investors in particular are aware about what they're investing in, particularly for younger demographics who this might be their first time investing in any capacity. And I think making sure that people are aware of some of the risks, because there are risks with any investment of this nature, is a huge part of this as well. So I'm very glad to see the FCA taking a step in that direction.
Well, again, I think this point, in adoption, again, you really nailed, because, and again, just to be clear to all of our viewers, in my capacity as an exec chair in a not-for-profit that does advocacy work, we are market asset technology secular. We are really open source from both policy and a technology front, and inclusive. And so when Helen and I first started talking about this, it seems that, the one thing, particularly for those of you who focus on crypto and understand the FATF travel rule and the requirements on VASPs or crypto exchanges now to do KYC, AML as part of their onboarding, it would appear to me this point, Yatin, you're making is a great marriage for me as we get into this next phase of adoption, because, whether you're looking at making remittances or you do want to get into investment, you've got a lot of on-ramps with institutions already if they've understood how to risk adjust and deal with these products. So, back to Jennifer's point, you're just lowering the friction. So I just really think this is it is an interesting time, because, again, picking up Gareth's point, everybody is looking at now, because of this demand, how they can get into it. Now, I'm conscious of time here, and I think we've got 6 minutes left on the clock, and then I'll be scolded if I don't get done. So, Yatin, I'm going to start with you, and I'm just going to compound the things we've spoken about on briefing, but just give us one or two of the big opportunities or barriers that you're seeing, and a big play or something that you see in the roadmap over the next 18 to 24 months at this intersection.
Yeah, absolutely. So, I mean, I mentioned just one customer to Chile today, Bitcoin Point. We have many more in the pipeline that unfortunately I can't share names of today. But I think as we get to that, as we go live with these customers, it will really become the default, and the expectation that open banking is the on-ramp, because the experience is incredibly slick. To be able to see the money leave your bank account and arrive with the crypto platform you're using to trade within seconds is an absolutely fantastic customer experience. And we also have other products that can help with the know your customer checks that these centralized exchanges often have to carry out. They don't completely solve for that use case, but they do go a long way to getting there as well. So I think that to me is the big kind of on-ramp as well. And also the fact that open banking inherently is incredibly secure, and it's an incredibly, you have that verification to be able to log into your bank account. It takes many steps initially, but because that is there from the get-go, from the beginning, it becomes an incredibly secure way of paying and reduces the risk of errors and fraud as well.
Love it. Gareth, top 3 opportunities, barriers, and what's big on the roadmap for us to pay attention to in the next 18 or 24 months?
I think a lot of the real world kind of use cases is going to come up around interoperability with different applications, but also payments in itself. Like in many senses, it's a marketing exercise when Tesla goes, we'll accept Bitcoin as a payment. And a lot of other companies are following suit, Bitcoin accepted here. But in a lot of worlds, that in a lot of ways, that is a gateway and the Trojan horse in. Look, we're doing something alternative, futuristic. We're allowing you to pay in a different means. And once you sort of, peel back the onion here, people are going to go, well, why don't I actually transact in maybe another asset I'm holding that is stable? Or why can't I find another way to pay? Because I don't like the fact my bank is going to charge me, or I don't have to do this. And people are going to start to maybe ask, is there a new method that can be done? So I think that is going to have a real fast emerging landscape around it. I know companies like Jack Mahler Strike in the US is doing some really impressive things about how they can do, transactions among, business to consumers and what that could look like in years to come. But the threats there is going to be a tremendous amount of regulation and new landscapes that people have to work and dance around, but it's fast evolving.
Well, it's so fast. I was saying, the innovation going on outside of your four walls is much greater than you can do on the inside. So the minute you come to terms with that and understand how you're going to relate to that, you'll start to be successful. But I have to say, a criticism I often get, and I have to admit to, is that in these conversations, and you've raised a really good point, and stability, volatility, settlement, finality, all of the stuff we talk about in the industry is critical. Again, to Jennifer's point, look, it's got to do what it says on the label. People just expect it to work. They don't expect your pegged US dollar stable coin not to redeem at, whatever it does, close to $1, depending on where it's making its money. But the criticism quite often, and I am open to it, we've tried to really reflect this in GDF, is that these conversations tend to be G20 country focused and regulatory focused, where quite often, and again, I will use El Salvador, the diaspora from Venezuela that's now in Colombia, where this is how you get money to family and buy food. There is a real utility or use case that is quite often outside of our focus of IOSCO regulatory protection, which we're all on board with. But it's the multiplicity, I think, of the global use case that quite often, and we use sight of. But I couldn't agree with you more. Now, Jennifer, you're going to run us out on this panel, and I'm looking forward to this one. But give us your kind of top 2 or 3 opportunities or barriers you think we're going to face, and the big thing on the roadmap for the next 18 to 24 months to pay attention to.
Right. And actually, I think I'm going to highlight really the one huge challenge, I would say, which is the regulatory ambiguity and fragmentation. When you have different jurisdictions, even localities within the same jurisdiction, in the case of the United States, with different states taking different approaches, when you have different political and economic and social motivations for how to regulate crypto, it becomes very challenging to innovate in this space when you don't know the rules. You don't know how they're going to change. You don't know who's going to enforce them all the time. And even, having the enforcement of those rules come years after the fact. Now, on the other hand, I would say that the technology itself poses challenges to being regulated. The whole point of regulation is to assign responsibility and accountability to an identifiable party who can address the risks that are being created: consumer protection, security, stability. So how do you enforce rules and regulations on a piece of code that runs distributed across various servers, likely in different countries? So, honestly, I think it's both the challenge and the opportunity over the next few months to few years in terms of how the industry and the technology finds balance with the regulatory community in a way that enables the technology and the industry to flourish, while on the other hand, being sure that we do address the risks that are created with some of these new innovations and ways of paying for things, transacting, etc.
Love it. Woman after my own heart, because Jennifer knows this is exactly what we set up the GDF community to do, is to get that alignment between industry and regulators. And I couldn't agree with you more. And I just want to ask you one question on this, and this is the community industry, phone a friend question. If you look at how this year and, going into 2021, really institutions now, I mean, everybody's talking about, PayPal and some of the other plays that are going on. It seemed to me that we got to an inflection point and everyone said, okay, we get it now. What I want to ask you is that, you know me as the practical optimist. I'm hoping we get at least to some sort of milestone with the regulatory community now, because if you put aside the rhetoric and even, picking on the stuff that's coming out of the US and Gensler and Yellen, there are a lot of productive things going on in the regulatory community, and then that institutions are coming in. And this is, I think, difficult for the crypto community sometimes to understand. Institutions generally mean adoption is going in the right direction because this is a highly regulated, sector. But do you think we might, get to that kind of inflection point with some of the major regulators on these assets or instruments over the next 18 to 24 months? And, most will just fall in line and say, look, I know we need to deal with tax, and clearly we need to deal with all of the, the onboarding, the on and off ramps and things certainly around consumer protection. But, is that something in your sights?
It is. I share that kind of realistic optimism in this. I think certainly within 18 to 24 months, we are going to see something. I think just the pace at which regulators, and I'll just pick on the United States, that they have invested in looking at this space and trying to understand it. You look at, policymakers who came out of the woodwork when the infrastructure bill was being put up to, debate what the crypto section should be and what is meant and why it was drafted poorly. And I know that we do expect, quite a few things over the next maybe even 2 weeks, 3 weeks from the presidential working group, putting out their recommendations to Congress to put forth crypto asset legislation. But I think it really goes back to the maturity of the market to accept it. Regulatory clarity helps. And we can even see when regulatory actions have happened, the price of Bitcoin has gone up. The market likes regulatory clarity. Will that regulatory clarity always be what individual crypto, protocols or organizations like? Likely not. But it comes, to scale. To meet that mass adoption, there have to be some rules and guardrails in place to protect consumers, to protect the financial system, et cetera. So I'm optimistic that we'll make a lot of progress. I envision that it will be a bumpy road.
Well, I love it. And this is just a great way to, I think, end this, particular dialogue for listeners, because I think the three of you have done just an outstanding account of the particular moment we're at right now, and accurately describe not just the trends, but the upsides and the downsides. And then I just make a point, I think, to all of the panelists, but one last point on, Jennifer's, message around the infrastructure bill. So there's a broker definition that's a bit messy, and many people in the crypto community, the Bitcoin, the public blockchain community, are a bit grumpy about it. But we'll have an opportunity to sort it out with Treasury. The thing I say to the community is, hey, look, if you're in the tax system, trust me, that's probably one of the biggest signs of adoption that you can get in any financial system. It's unlikely that you're going to go away if the government has worked out how to collect tax revenues from you. So that is definitely a milestone of coming of age of sorts. But I would like to thank the three of you for a rockstar panel. That was absolutely excellent. I'm only a couple of minutes over time, OBE team, so I hope I'm not going to get scolded too much. Let's get on to the next panel. And Austin, I'm going to start with you, but if you can just give us an overview. We're at the intersection of crypto, and in this case, stablecoin, CBDCs, and the open banking, open finance community. What's the impact and what's the role of all of this stuff?
Yeah, thank you very much, Lawrence, and pleasure to join you here. I think sort of that intersection with open banking and sort of crypto space is really interesting. I think, particularly we're seeing that alignment quite a lot in the payments ecosystem. So, how can crypto be used for to facilitate payments? I think, sort of we talked a little bit about that in the last panel, just how people are increasingly wanting to use this and kind of, being able to use innovative means of making their payments, sort of the enhanced settlement opportunity that can happen there. Some of the sort of like smart data, the sort of smart contract opportunities as well, and breaking out into the sort of decentralized finance environment. I think there's a lot of demand rising up, at least within the UK, within sort of consumers more generally, to sort of try out these services and find them. I think there are some sort of complications that might need to be overcome. I think we've talked a little bit about that regulation piece. How do we make sure that this ecosystem is trusted, it's safe, people can transact on it in a sort of good fashion. I think again, sort of we referenced that CBDC reaction. How does a central bank, how does a government sort of ensure that its users, sort of its populace, can use these services in a way that is kind of effective and kind of linked into that sort of single system which governments often try to create. So I think we're certainly very supportive of the Bank of England's engagement on this, just trying to understand, well, what use case does a central bank digital currency potentially have for the UK, while still looking alongside that at that stable coin environment. Where can private firms and kind of private initiatives really seek to leverage the new technologies and deliver that functionality to the market. And I think one of the potential benefits that can be brought out from that discussion, from that sort of stable coin central bank digital currency perspective, is that sort of concern around volatility. When you are transacting, when you are sort of engaging in a sort of a bit more of an asset space with the sort of traditional crypto assets, how do you manage that volatility? And I think that's something which a lot of smart companies around the world will have to face into and really create something which is usable, trusted, stable, is within the regulatory perimeter, have those consumer protections and those checks and balances to make sure that consumers can use them reliably on a day-to-day basis.
You raised so many good points there, and I think in the context of again trying to get a bit of a classification or architecture of things, I think number one, the role of open banking, which I think is a great UK innovation, similar to the FCA Innovation Hub and Reg Sandbox, which so many other countries have picked up. But open banking and open finance in Europe are broadly top-down government-led policies, with the finance departments, regulators, etc. Whereas open banking and finance, Americans would say, well, we don't have that, but it's actually going on. It's just going on in the private markets and willingly in the FinTech and innovation ecosystem. And then again, bringing in this point about volatility, I always get the sense that this is the important bit for governments, and that with a fiat or CBDC, there's a degree of certainty over your pound, euro, or dollar, which is critical to the trust and confidence of open banking. And so, Dr. Jane, I'm going to turn to you at this juncture, and it's so lovely to be reunited with you again on a panel. But Jane, can you just give us your views again, and maybe even start to unpack some of the use cases? But we're at the juncture of open banking and broadly crypto and digital, and we've sort of put it in the payments infrastructure between stable coins and CBDCs. Not that we're trying to pit the two off with each other, but tell us what you see happening, and maybe even put some flesh on some of the sort of emerging use cases that you're seeing.
Oh, thank you. And Lawrence, it's so great to be on a panel with you, and everyone else. Thank you for welcoming me. I mean, look, I think there's some really big things going on here, and I just want to kind of bring them from a global perspective. And I did a fireside chat with Professor Campbell Harvey, who has recently written a book called DeFi and the Future of Finance. And he's basically said that central banks are already dead, and that the banking system is going to be absolutely transformed over the the next few years, with many banks closing down and others significantly transforming. So, I think we need to be looking at a future that's bigger than what you're thinking about in the UK. And so Chain Analysis recently did a global crypto report, where what they found is that the majority of the countries that have, significant proportions of the population who are engaging in crypto are emerging economies. And so I think what we're going to see is a real movement of the locus of focus, if you like, in terms of the adoption of cryptocurrencies. And Lawrence, you've talked about El Salvador, to emerging economies solving the problems that they've got on the ground now. And even, talking about banking, I've started saying, well, why do we need to talk about banking if people on their mobile phone can have a wallet and can send, receive currencies, borrow, lend, stake, and do all of the functions of traditional finance that are enabled by DeFi? And I fully accept that there's a lot of risks around DeFi at the moment, but I think DeFi is going to begin to disrupt financial services, in a very significant way. And we're already seeing the movement of investors and money into stable coins in DeFi. We're starting to see traditional finance banks and companies trying to figure out how they can interact with DeFi. And we're also seeing, which hasn't been mentioned yet, but I think that this is something that's going to be relevant with mass adoption, is the rise of NFTs and gaming. And my own personal point of view is, in fact, it will be gaming that will be the pathway to mass adoption in terms of crypto, because gaming is a huge community, it's growing, and people are used to transacting in digital assets and crypto. So just kind of coming back to where we want to be, I think that it's not a stepwise discussion. We're seeing monumental changes, and I'm sitting here in Dubai and seeing what's going on in terms of the metaverse and how people are participating in transacting there, sitting in the middle of the Middle East, Africa, India, where during the pandemic, the traditional finance system did not work for people at all during the lockdowns. So people started using crypto for remittances, for foreign exchange, for peer-to-peer transactions. So I think we're seeing a kind of a revolution in emerging economies where you've got 70% of people with mobile phones. It's mobile first. You've got a young, digitally aware group of people, and you've got countries with major problems. So I actually, highly commend to you to think about what's happening in the UK in the context of what's happening in the broader global community in terms of crypto, because I think in the end, UK is going to be learning from what's happening elsewhere, not driving what's happening.
Well, Jane, as always, inspirational and very wise guidance. And I think for our listeners, when I was talking about people in the community, they're always telling me stop focusing so much on the G20. Jane's typically one of them, pulling me out of the G20 box. And then note to Helen, we need to do the intersection of open banking and DeFi and NFTs or some of the other things rather than try to unpack them in this particular session. Suffice to say that the on-ramps, the off-ramps, and the data are critical as well to making these things happen as they would be in the payments of the crypto or the CBDC space. And then I just like, before we move on to Robert, who's a real black belt on a number of these topics with payments and CBDCs, just put into context something you said, Jane, which should be really very, very important in your strategic roadmap for our listeners, which is, again, without getting into the dogmatic discussion, if you ultimately look at digital fiat and what's called atomic settlement or real-time settlement, in both fiat and the private market, most of you have been in the banking industry for most of their lives. Will say, well, what is the job then of banks? And that's a very important part of what's going on. And Jane, you would have loved in one of my panels this morning, somebody was asking all of the big banks, is Binance a threat? And Hervé, Francois from ING said, and I love this, when Blockbuster was asked if they're paying attention to Netflix, they said, we don't even know who it is and we don't even have them on our radar. And I just thought that's really, that's what you reminded me of in talking about where the future is going, particularly for some of the banks. So thank you for that. Robert, let's dive right into it. I loved our briefing call, but you need to decant your knowledge and expertise to the community on this. So we're at the intersection of open banking and the payment system with either stable coins or CBDCs. What's going on? Robert, you're on mute.
We're there.
There we go.
Am I on?
We're on.
There we go. Thank you. So thank you very much for that great introduction. And yeah, I'm in the middle of drafting this green paper alongside Boston Consulting, really looking at how we create this segue between where we are now and where we're going to be when CBDCs come into play fully. The whole area of CBDCs is great, but it needs a number of CBDCs to be out there in the marketplace to make it work. And at the moment, the only one that's charging and has been charging since 2014 is China and their Digital One, which is in pilot. And from the numbers I've been given, it will remove 15 trillion from the global reserves of US dollars by the end of this year while it's still in pilot. Because CBDCs aren't trying to replace the US dollar as a global reserve. They just don't need a reserve. You don't need any reserve currency if you've got CBDCs. That's the whole point. But we're not there yet. I mean, the Chinese are the furthest ahead, but the rest of the world is playing catch up, and I think they're starting to recognize what's going on. But there is this interregnum position that's got to exist where fiat and crypto work side by side, and you have the DeFi working along with CeFi. Centralized finance and decentralized finance have to work together in this interim position, and how we make that work. So I'm working on this green paper, which is looking at what the Bank of England is doing with its new omnibus account, and I'm sure my following speaker, who is at EPAM, he understands the omnibus account even better than I do. But we're looking at what the use cases are out of an account that you could hold at a central bank, whereby you can have 24/7 settlement. And it may not just be the Bank of England. It may be that you have the Bank of England, you have the Federal Reserve, you have the European Central Bank, basically creating a platform for which you can create synthetic CBDCs or strong stable coins, whichever way you want to call them, which can be used in the payments infrastructure. And I think that is where this bridge or this segue is going to come through, where you start looking at how we can create an interoperable structure for stable coins to work in the payment industry. Because the problem with the payment industry compared to, say, the current crypto industry, if you look at Bitcoin, you get something like 3 transactions per second. If you look at Visa, MasterCard, you're probably talking about 60 to 100,000 transactions a second. And you're not going to get that with a decentralized system, because decentralized systems are one of the reasons why you can't move that quickly, because it's decentralized, you've got all these nodes. So a more centralized solution, or a solution that works together can get up to 100,000 plus transactions a second on a blockchain where you've got a centralized version of it. So how this is actually going to work in practice is what we're trying to push out from this green paper, and what this segue is going to be, whereby you have because you've got to have this whole consumer education piece. And I've talked to Austin in UK Finance on this, because one of the great hopes of decentralized finance and crypto is all about the inclusion, financial inclusion, being able to include everyone in the banking world. Peer-to-peer transfers on a system that everyone can trust and everyone can have access to, whether or not they're on the internet, and how you basically educate all frames of the community. both those that are unbanked because they choose to be unbanked, and those that unbanked because they have got no access to banking solutions. And this is really the nirvana that we're looking at for payments and this whole CBDC stablecoin position. And that is where I see payments and this whole digital currency piece coming through. And I think that's where the real excitement is, where you could build this world where you have fully digital and inclusion of everyone. And as I say, I know the government in the UK and I know UK finance are working very hard to look into this whole way of ensuring you get this education through to enable everyone to have access to funds. Because if you can't have access to online funds or to buy stuff online, you are paying more for your goods and services, and you don't have the same access to those goods and services that everyone else does. So it's more than I think just this fad of like what is crypto, what is CBDCs. This is changing the way the world works and how we can make the world a better place through payments.
Well, I just love that narrative, Robert, and I think the point you make about reserve currency in the context of CBDCs and atomic settlements is hugely important. And following on from Dr. Jane's point, it's not just important for inclusion or your own jurisdictional sovereign financial system, but this is where trade starts to kick in. Global trade, which is, I think what would have the US folks particularly worried about in looking at the digital yuan, or the digital renminbi, and just how that unpacks. But I think you've done a great job. And, this is another note to Helen on future sessions, because your point about the transaction volume on node networks are right and fine. Put aside quantum computing, which is coming, but in my own sort of simple view, we need to get with payments from where Napster was, to Spotify with, broadly consensus or blockchain models. I'm not sure how we're going to do that, but we'll leave it to the great minds of the engineers in the community to sort it out, which gets us, Stefan, to you, because you're the guy that central banks come to and say, hey, we got this omnibus account and idea. You need to give us an idea of how we're going to architect it, make it work to a degree of quality and standard that'll allow all of the protections that need to be in place in the system to work. So give us your thoughts on how this is going to happen.
Absolutely, thank you very much. So there have been a few points being made already before about, broadly speaking, inclusion and adoption. And I think those are very much keywords. And funny enough, a strong parallel from the open banking world and where open banking might have been in the last few years when it comes to inclusion and what allows that inclusion. As EPAM, I'm a technologist. I look at it from very much the solution perspective. And the biggest challenges I think that the market is facing right now is how to bridge those two worlds, how to bring those two systems together. And I very much am an advocate to look at this adoption as an open loop system and don't think in closed loop. So here's crypto, here's fiat, here's the old world, here's the new world, but instead think about how to bridge those two. And there's a debt to be paid on both sides to make that happen. In the old fiat world, there's existing systems in place, there's existing solutions to problems that crypto technology, not only cryptocurrency, but crypto technology, think about DLT, just as one example, can bring new approaches and new views on how to solve these more effective, more inclusive, more broad in general. And the old world is going to have to open up to allow for innovation, to allow for connectivity, and at the same time, the crypto world will have to do some steps to accept and acknowledge, and also move towards how to build those bridges so that the two worlds can ultimately connect.
Well, what a very elegant way of putting it. I couldn't agree with you more. And in my own geek community, I keep telling people it's not really helpful to talk about DeFi as decentralized or a TradFi or a CeFi, because it just doesn't work like that. And quite often things that people think are decentralized are actually highly centralized in some aspects. So I just love that narrative.
So without further ado, Robert and Jane, Dr. Jane, I am really eager to hear what you two have got to say. So if we can sort of do it in 10 minutes, that would be absolutely wonderful. Please take it away, Robert.
So
Okay, Robert, let's get going on the past 10 months and the trends, and then we'll go on to market volatility and risks, and you can tell us about the safe bets.
So yeah, I mean, it's been a crazy time since we had the halving of the price of Bitcoin back last year. We've now gone on the biggest bull run it's ever had, and I think that's dragged a lot of other altcoins along with it. We still haven't seen anything like a divergence. I think when Bitcoin runs with the bulls, everything runs with the bulls. There is still a complete crowd sort of scenario. They're all like sheep, aren't they? It is difficult to really understand what causes these. We have these whales in the marketplace that can sort of drop in and drop out very quickly. But where is it going? I mean, you must have some really good insight on some of these bull runs, and you've seen them in the past.
Look, I think the big things, as we were talking about before, has been, first of all, I think the pandemic has absolutely caused a surge in adoption, in people staying at home, in people taking up trading. You've got these emerging markets using Bitcoin as a store of value, and not to mention El Salvador adopting it as legal tender. And then, I think all of the introverts who build systems have been sitting at home during the pandemic and building kind of really awesome new coins. So you've got stable coins, quadrupling in the first half of 2021 to 112 billion. You've got the DeFi boom with everyone absolutely going wild there. You've got meme assets with Dogecoin going 55 times. And you've got Ethereum competitors, coming to the forefront with Solana, Polygon, Polkadot, Binance, Cosmos. And, you've got the move of the institutional investors into crypto, but you've also got Coinbase, Bullish, and Circle announcing that they're going public. So, and that's not even to mention what's going on with NFTs, where you've had 338 million in transactions, in the period of about 6 months. So, and I need to mention the play to earn game. So I think we're just seeing this incredible innovation going on in crypto markets. So, I think the question that I'll put back to you is, if you're trying to talk to people who want to invest in crypto markets, what kind of investment strategies could they think about, and what kind of returns could they expect, and what are options for new investors?
I mean, I still think the warning that they can go rapidly down as well as rapidly up is it's almost like shares on steroids, the rapidity of the movement. So if you're going into this, if you're going into this for the long term, like some of the institutionals, and they're using it as hedge, you can see that they're hedging off a lot of other assets, and people are starting to use sort of Bitcoin and some of the larger coins as sort of gold substitutes almost in the current market, in the same way as who decided gold would have a value in the first place, who decided Bitcoin? Well, the market did, and it's now being able to stabilize a bit as it goes up, but it's not dropping as much as it did before. So you've got this sweep, and each time it drops down, it sort of has a half-life and then repeats. So I think there is a longevity in it now that is going to be difficult to pull out of because of the amount of institutions that have gone into it. And I think that is one of the key learnings I think we've had. I think equally the regulation, we've had the European regulation that's being proposed, and that is an interesting one, as you know. It's the sort of regulation on markets in crypto assets, and that specifically has excluded coins which are otherwise regulated as securities, or perhaps as electronic money, but is particularly pointed at the other areas of crypto assets. At the same time, we've had the implementation of the Fifth Money Laundering Directive across the whole of Europe, but we've in that had this issue at the Financial Conduct Authority in the UK, whereby they've had hundreds of applications and very, very few, they've 13 in fact have been approved, and there's over 60 on the sort of a waiting list grandfathered, and the rest are pending. I don't know why it's taking so long. I think it's because the process is almost more rigorous than getting an e-money license. And so the FCA is too scared to get it wrong with some of these. And so that is basically narrowing down the UK market at the moment. And it's interesting that the rest of Europe has got this same plug. So anyone touching crypto assets needs to comply with this. So we are seeing a rise. And then most recently in the UK, we've had the HM Treasury review looking at stable coins and CBDC regulation. And again, this seems to all be kicking back to the Facebook Libra scenario of the past, which is now DM. And we saw only yesterday that they've had their wallet launched to look at how you can prevent the destabilization of a nation's currency through the influx of a third-party CBDC or stablecoin coming in, and whether it be the Chinese yuan digital coin or whether it's the new version of Libra, the DM, etc.
But I think that's such an interesting topic, and I can't avoid talking about it because, you know, we've heard about the Chinese yuan, but what hasn't been said, and I think is important, is that if the Chinese then choose to require that Belt and Road countries, of which there are more than 100, transact with them in the digital one, then it is definitely going to be a competitor to the, you know, the sort of US dollar as the global monetary system. So that's going on. Then you've got the BigTechs, which is not just Facebook. They were just the ones that went public on it, who were all entering into provision of financial services. And then you've got, if I can say, the innovators who are building gold-backed stable coins, USDT, and all of these other stable coins, who are also trying to play in the private currency market. So I personally think it's not just the CBDCs. There's this whole kind of stable coin showdown that we're watching play out, and we don't know how it's going to play out. And many of these are multi-jurisdictional in nature, and I'm personally going to be fascinated to see what happens. So I just want to kind of offer that, and I'm very conscious we've already nearly had our 10 minutes.
We've whizzed over time many times, but
yeah. Anyway, Robert,
I think just showing how we need to come back and have another session. I think with more time behind us, because I think even in a few months' time, the scenario changes so quickly in this market. I think within 3 months' time, we'll have a completely different outlook on everything and much better vision. It just keeps changing.
Jane and Robert, I didn't mean to, I was just trying to sneak in there. I am so sorry. We will come back, and Jane, Dr. Jane, I would absolutely love you to come back another time. I mean, when Lawrence and I had this idea for putting on a panel, we said, well, is it going to work? What are they going to talk about? Clearly, it is going to work. Clearly, there is loads to talk about. We try to get the proverbial pint into the quart pot. So for each and every one of you, I promise you over the course, and we've said it's going to be a quarter, I think we probably need to review that, but I will take my wise counsel from Robert and Lawrence to get the cadence right. But all that remains for me now is to say a huge thank you to everybody. And I will gently, if I may, just start wrapping it up. So I would like to thank Jane and Robert. Absolutely amazing. Dr. Jane, you used the word fascinating. I think that's the one word that I will use to sum up this, our first crypto campfire. For me, it's been absolutely fascinating. On occasions, the hair has stood up on the back of my neck. There is something very, very exciting happening here. And in particular with what MasterCard, what Jennifer was saying about compliance and security, all that goes to is the fact that this is going to be more mainstream. So to everybody, you've a place whenever you would like it around our campfire. We will be sharing the full recording on our YouTube channel, on all our social media channels, and we will be sharing edited versions as well. And I, for one, will be re-listening to this. And of course, Gareth and Robert, we will be continuing our Crypto 101s. So maybe we should invite Dr. Jane to that one as well, and a few of our other panelists. I feel we can add a little spice and a lot of learnings there. So before I sign off, I would like to thank Karina, who you've seen is busy graphically recording, such a talent at the side of our screens. And I would like to thank the OBE team. You've done a sterling job. We weren't sure how this would go. I think from the content that has been produced today, we know that this was an outstanding success. So if I can just by thanking all of our sponsors, you've been able to see their logos throughout this campfire. A big thank you. All that remains for me is to wish you all well and to keep very safe. Thank you and goodbye.